Hello students, welcome to MJC Learning. Today we are going to start with the new chapter of economics, that is national income. This is part 1 video of national income. There are total 7 parts of this chapter, so please go through it properly. Let us get started. What do we understand by the term national income? What is the meaning of income? Income, that means whatever earning comes from the people. Here we are talking about national income. So now we are considering income from the whole nation. That becomes your national income. For example, your parents are earning, right? So that becomes income. Now same way, if we consider income from all over India, that is from our nation, that becomes our national income. So this particular concept we are going to understand in detail in this chapter. National income is one of the important subject matter of macroeconomics. Now this national income comes under macroeconomics concept and not microeconomics, as you have already learned the difference between micro and macroeconomics. Macroeconomics is wider concept. It takes into account the whole nation. So, when we are learning about national income, that means we are considering total nation's income, and so it becomes a wider concept. Therefore, it comes under the macroeconomics branch of economics. National income is the flow of goods and services which become available to a nation during the year. That means whatever goods and services are produced in a country in a period of 1 year, that is considered as national income. So that economic activity whichever takes place in a country in a period of 1 year, economic activity means whatever buying, selling, production, distribution of all the commodities, all these things which are taken place in a period of 1 year in a country and is considered as national income. National income is a composite measure of all economic activities such as production, distribution, exchange, and consumption. So basically, we are talking about four main economic activities which takes place in a country and which produce the money in the economy, which creates the money, which creates the employment opportunity in the economy. So that four basic activities are production, distribution, exchange, and consumption. By these four economic activities, whatever money is generated is considered as national income. Like how we pay taxes to the government, right? Then we buy commodities from the market. Then someone must be producing some commodity. So by this means, whatever money is generated, that is all considered as income, and because it is country's income, it goes as national income. To be more precise, national income is the aggregate money value of all final goods and services produced in a country during 1 year. So that means national income is the money value. It is basically we are considering here in money terms and not in goods term. So basically we consider how much money is generated in a country in a period of 1 year. Basically, and why I'm saying again and again 1 year, because we considered whatever money generation takes place, that is for 1 year, and that way we compare with every year's generation of money. We can compare with every year's money amount whichever is generated, and that way we come to know whether our country is growing and developing or no. Let us move further. The total economic performance of a nation is evaluated with the help of national income data. So, just now only I explained that if a country is developing or growing, how we will come to know? We will consider the income, the national income of a country, we will compare it with maybe earlier data, that is maybe earlier years data, or with the other countries data, and by which we come to know whether our country is growing well or no. This is like, if I tell you in example way, for example, whatever marks you have, you consider your marks with your previous exams, maybe your earlier exam papers. So then you come to know that yes, I am doing well, or no, I am not doing well. Or maybe you compare your marks with your friends marks, and then you come to know whether you are actually going ahead or you are not moving ahead. Same way, when here we consider the money amount of a country with the previous data, we consider current data with the previous year's data, or else we compare it with other countries data, and by which we come to know that what whether we are growing. If suppose we are not growing in proper way, then government can find out some policies for that. At present, Central Statistical Organization, that is CSO, compiles and publishes data on national income every year. See, it is written every year, so whatever national income generation takes place, that is calculated every year. And who does that work? That work is done by the Central Statistical Organization. Compiles means पूरा डेटा वो लोग उसको एक उसकी डेटा शीट बनाते हैं, उसको छोटा करके, और उसे पब्लिश करते हैं हर साल. Let us move ahead. Now we come with the meaning of national income. National income is the flow of goods and services produced in an economy during a year. National income is monetary. Monetary means money value. Monetary value of all goods and services that take place in a country in a period of 1 year. So this is the basic meaning of national income. The total income of nation is called national income. As I told you before, what is the meaning of national? This is countries related. Income means your earning. So what the country is earning? We are not considering here the household earning, but we consider here the total country's earning, which becomes national income. And why national income is important to learn? Because when a country's national income is known, then only we can spend. For example, your family is earning some amount. Maybe your parents are your father is earning, your mother is earning, your brother or sister is earning. So finally, when you know how much you are earning, how much total uh, money you have in hand, then accordingly you can spend, right? Before knowing how much money you have, you can't spend. So that way we need to know the total money value of whatever production, distribution, consumption, exchange, consumption took place in a country, by which we will come to know how much money actually we government has in hand, and then government can spend it for people's welfare. Now let us see some of the definitions of national income. One national income committee, that was formed in 1948, and as per under the guidance of PC Mahalanobis as chairman, and Professor D.R. Gadgil and Dr. V.K.R.V. Rao, they were the members. And as per them, a national estimate measures the volume of commodity and services turned out during a given period, counted without duplication. Now duplication means same commodity, if it is sold, for example, let's say mobile is purchased, a new mobile is purchased by you, and after 6 months you sell that mobile to your friend. Now already you have paid for the new mobile, so that amount will be calculated in national income. But when you sell that mobile to your friend, it becomes a second hand good, and that amount will not be calculated, as it becomes duplication of the same product. I hope this is clear to you. Duplication means same amount if it is sold twice or thrice, but only first hand amount is taken into account, and again if it is sold, that is second hand, third hand, when it becomes, that amount is not taken into consideration. Other definitions which are given by Professor A.C. Pigou and Professor Fisher. Let us see the definition given by Professor A.C. Pigou is: national dividend is that part of objective income of the community, including, of course, income derived from abroad which can be measured in money. So we consider all the aspects, that is all the uh, economic activities which takes place in a country, and also we consider income which we receive from the other country. So that also increases our uh, money aspect, so that also has to be taken into account. So money which are produced in our country plus money which we receive from the abroad. And the definition which is given by Professor Fisher is: national dividend or income consists solely of services as received by ultimate consumers, whether from their material or from their human environment. So whatever purchasing or economic activities takes place, that is considered as national income. Now let us see the features of national income, that is what are the characteristics of national income. First is macroeconomic concept. Now, as I told you before, national income represents income of the economy as a whole rather than that of an individual. That is, macroeconomics deals with the aggregate or the economy as a whole. Here we are not considering only a particular family's income, but rather we are considering it the whole nation's income. Therefore, it becomes macro concept. Macro means wider concept, it's broader concept. National income data presents the picture of performance of the country's economy as a whole in course of a given period of time. So, whatever country's income or maybe whatever money we have received from the foreign countries, that is calculated. And who does that? National income data presents the picture of the performance, that is whatever how the country is performing, by which we by this national income we come to know how the country is performing. And this is macroeconomics concept, because this is a wider concept. We are not considering it about an individual, but we consider the group or the nation as a whole. Let us look at the second point: value of only final goods and services. In order to avoid double counting in national income, the value of only final goods and services produced in the economy are considered. Now, only final goods and services. I'll give you an example. For example, a sugar is made from sugarcane, that you all know. So, when we consider the value of sugar, we consider the final value of sugar. So now, when we consider final value of sugar, that means we have already included sugarcane price, then its processing charges, then whatever requirement process was there, all that charges are included in the price of sugar. That becomes your final price of goods and services. While calculating that, we will not add again the price of sugarcane into it. That becomes your double counting. You have already included price of sugarcane into the price of sugar. It is already included. Like when you make a calculation, price of sugarcane plus its processing charge plus suppose raw other raw material if required, all these things gets added, and then you make a total of, let's say, 50 rupees price for sugar. Now in this 50 rupees, suppose if you have already now you will not add 10 rupees of sugarcane into it, because that is already added. This becomes your double counting, and we consider the value of only final goods and services. The value of intermediate goods or raw materials are not considered. So we will not count it twice. Suppose if total counting came to 50 rupees, again in that we will not add raw material costing 10 rupees plus raw material cost plus sugarcane costing 10 rupees, then it will become 70 rupees. Why it will become 70 rupees? Because we are counting sugarcane two times, we are counting other raw materials two times. So again, value of only final goods and services has to be counted. Then comes net aggregate value. National income includes the net aggregate value of goods and services produced and does not include depreciation, that is, wear and tear of capital goods due to their use in process of production. So we do not suppose if you buy a mobile and after 2 months 3 months you are repairing it. So wear and tear means that mobile becomes old, and if some part has to be replaced, or let's say mobile or car or anything which now you are buying new parts for that, so that thing will not be considered. It includes only the net value, whatever uh, when a product becomes old, and when you are using new when you are buying new parts, or when you are doing servicing for that product, maybe after 2 years if your car needs a servicing, your bike needs a servicing, that will not be included into the national income. Then comes net income from abroad. See, that means we include national income from the abroad, that is whatever income we receive from the abroad in terms of export and import. So now obviously our export has to be more than the import, which becomes x minus m. X stands for export and m stands for import. Your export has to be more. And net difference between receipt from abroad and payments made to abroad. Payments means whatever we are paying to abroad and whatever we are receiving from abroad. So receiving part has to be more and payment has to be less. So that income, whatever income we receive from the foreign countries, that is also considered as, that is also added into the national income. Now one word which we have learned here is depreciation cost. And what is the meaning of depreciation? Depreciation is a non-cash expense that reduces the value of an asset as a result of wear and tear, that is because of age or outdated over the period of its useful life. So whenever you are doing servicing or you are changing any part, because that particular commodity becomes old, and whatever expenses you do, that is uh, considered as depreciation. Any product you buy, after some time it becomes old, right? Even if it is month old, still it is called as second hand product. So whatever change servicing you do into that is not considered in again, we do not add that amount into the national income. Then financial year, that is national income, is always expressed with reference to a time period. In India it is from 1st April to 31st March. So when national income is always counted for 1 year, we they find the data for 1 year, and it becomes like if we take 2020 this year, then 1st April 2020 to 31st March 2021, this will be the 1 year. Then again next year it will be like 1st April 2021 till 31st March 2022, and so on. So it will be like financial year is always calculated for a year. The next concept it is a flow concept, that is national income is a flow concept as it shows flow of goods and services produced in the economy during a year. That is national income. Why it is flow concept? Because national income is the flow of goods and services produced in a country during a year. That is whatever production takes place in a country, the production, consumption and exchange and production, distribution, exchange and consumption of that commodity, and this is always taking place. It is not something that production always takes place in particular month and in next month it will be not there. No, it is flow concept. This goes on. Once production takes place means with that production, distribution has to be there, exchange has to be there, and consumption has to be there. These four economic activities goes hand in hand, and this takes place all the year. It doesn't stop in between. That is the reason it is flow concept. Flow means जो बहता है, पानी कैसे बहते रहता है. So even national income is a flow concept. It doesn't get stopped. Then comes money value. National income is always expressed in monetary terms. That is, we consider how much money we have earned rather than how much selling of product is done, we do not consider how much products are sold, how much products are sold in a year. We do not consider that. We consider how much money is generated. Money, particularly, we think about the monetary terms, money value. And in India, the National Income Committee of the Central Statistical Organization uses the income method for calculating national income. We consider income method for calculating national income. Now, what is national income? What is income method? Sorry, that we will see when we go further. In this particular video, we have learned about the basic concept of what is national income, the some other definitions given by economists, and we have also seen the features of national income. In part 2 further, we will see the next concepts of national income. Thank you.